Hello, this is Hall Martin with Investor Connect. Today we're here with Roger Chen of Silverton Partners. Roger, thank you for joining us.
Hi, Hall. Thanks for having me.
Great. Can you give us a quick background on yourself and on Silverton?
Yeah, absolutely. So I'll start with Silverton. The firm has been around for about 15 years. We're currently investing out of our fifth fund. At the early stage is the focus. We are typically a lead investor at the seed and Series A rounds of financing. We're fairly hands-on. We like to roll up our sleeves, and usually we'll take a board seat when we invest. We invest across B2B as well as consumer. So that spans everything from the top of the stack at the application layer all the way down to the infrastructure. We're also investors in a number of marketplace businesses and tech-enabled services. So it really spans the gamut. And I like to think of it as a reflection over the years of the Austin market as it's evolved. And I joined Silverton about a year ago from New York. So I was previously with Comcast Ventures, their seed fund, running that operation out of New York called Genicast Ventures, where I was responsible for sourcing and investing in companies, primarily B2B software companies, from Boston down to DC was kind of my corridor.
So how did you get into the VC world? It sounds like you had an interesting path through the venture capital space. Can you tell us more about what got you into it?
Yeah, absolutely. So I started my career as a software engineer. I majored in computer science, and so I have a technical background. And soon after college, I was able to get a job at Google. And while there, I positioned myself to become a product manager. So for a period of time, I was running product for Google Maps. And after a few years of focusing on Google Maps, I was starting to get a bit bored, and I was really spending most of my personal time reading tech blogs and whatnot, thinking that I would want to start my own company or explore the venture capital world. Luckily, there was a firm back in my hometown that just was getting started, focused on transportation technology. Me, given my background with Google Maps, reached out to them. We found a fit. So I joined them for a short period. And this firm in Detroit was called Fontanalis Partners. After that, I spent some time consulting with a number of firms on the West Coast, pro bono, really, until there was a partner there that I had worked with very closely who, while they didn't have a spot, made a recommendation for me with Comcast Ventures on the East Coast. So the partner I was spending some time with on the West Coast doing projects for, in his past, he had been an intern for the managing director at Comcast Ventures. And so I was able to utilize that and use the connection to get a job full time in the industry. And so Comcast Ventures is where I spent the next 3 years. I like to tell people that there isn't any one obvious path into VC, but you really do have to be willing to do some things to set yourself apart. When you look at the industry at large, there's about 1,000 seats available, right? Investor, GP seats. And of those, how many go open for new folks to fill each year? Very few, right? Because people don't really leave this industry. You're thinking about those numbers and the odds, and you really have to realize that you have to go a bit above and beyond to figure out how you can add value to VCs. And for me, that was spending a lot of time not getting paid and doing a lot of work to open up ideas and markets to some firms. And it ended up working out in the end.
So as you got into the VC space, what surprised you most about it? Based on what you thought it was and what it actually was, what was the big changeover there?
Yeah, so I think from an outsider's point of view, especially if you're not a founder, you don't really have the full insight into the life cycle of a investment, right? Because it begins with the sourcing and diligence and that initial check. And I think that's what you see in the headlines, and that's what you assume the entire job is, or at least for a time I did. And once you cross over to this side, and part of this depends on the type of VC firm. For a firm like us, like Silverton, that tends to lead, we're much more hands-on through the entire life cycle of the business. So the companies that I've invested in here, my founders are calling me on a weekly basis, if not daily, to use me as a sounding board for strategic ideas and whatnot. So it's much more engaged post-investment than many would think. The other thing that I was surprised about was you're not everyone's best friend. in this industry, right? Because a lot of this job is having to say no to people who are really passionate about what they're doing several times a day. And that's not something people discuss frequently, but I think over time, it wears you down a bit, right? And you do want to be supportive and you find ways to try and add value, but at the end of the day, it's a very competitive process to fundraise. And so that's also something that I was a bit surprised by once I became an investor.
What do you find the key skills are for doing the VC work every day? If you had to pick just two or three that stand out, what are key skills that you think you really need to hone and do well with this to be successful at this?
Yeah, I think there are a couple of things. Once you get past the basics, right, the first principles of what makes a good investment, great team, a great market, great business model, I think over time you develop your own style for investment and you look for things that interest you. And I think when you watch any venture capitalist that has been in the business for a long time, they tend to have very distinct opinions on the types of founders they look for or the types of markets they go after. So I think a key skill that one develops over time in this business is building their own personal view of the world and thesis on how best to invest. For me, one of these, to give an example, one of these qualities that I'm learning more and more to look for is founder grit and, a history of tenacity, a history of working hard against the odds. Because oftentimes, especially at the early stages of a business, there's going to be so many times when things look like they could fall apart or you have to make tough decisions. And all of the folks that I'm investing in, they could go take very nice, comfortable jobs at Google or Facebook or wherever they want. And instead they're doing this, right, on a shoestring budget. So when I think about that, it really comes down to, for me, finding people who have been through the struggle of either entrepreneurship or an interesting trend I'm starting to see with some of the folks I'm working with is many of them are former athletes. So maybe it's college sports. One of my founders was a swimmer. One of them was a hockey player, and it just so happened that way. I wasn't looking for that in particular, but I think it does speak to this idea of equality in an entrepreneur. And, the other thing I would offer in terms of skills in this business would just be the willingness to hustle. I think just like an early stage entrepreneur, a big part of what we do is putting ourselves out there to help people and to build relationships, and you really have to put time on the ground to do that.
That sounds great. Switching gears for a moment, the venture capital world is changing rapidly right now in a lot of different ways. What are the trends you see it changing into over the next 3 years for the VC?
So there's a number of trends that we're seeing that are being discussed in the media. Some of these are SoftBank Vision Fund and other large Silicon Valley-based VCs raising record billion-dollar funds. And then the other trend that folks are talking about is ICOs and the potential for tokens to be used for fundraising and potentially as a disruptor for venture capital. To be honest, so far we haven't seen the impact of that at the stage where we invest, at the early stage. I think there are still challenges ahead for cryptocurrency investors that are trying to leverage that infrastructure for startup investment. I think there are some challenges with that. Hopefully, I'd like to see them overcome. I think it's great to have more capital at this early stage, funding interesting businesses. But at the end of the day, it's tough to predict where that will be in 3 years and where the regulatory piece will be. And on the later stage front, I think we're in a particularly frothy market at the moment. Not just those well-capitalized venture funds, but also it's very competitive for private equity firms these days that are using a strategy of acquiring technology businesses. And so what we're seeing is a great later stage and exit atmosphere right now for the companies in our portfolio. And I think that's a great near-term benefit. And in 3 years' time, again, it's tough to predict where that will be, but it doesn't affect our day-to-day.
Well, there's a lot of new sectors out there. It used to be just enterprise software, but now there's blockchain, there's AI, there's data analytics, there's CPG. There's just a lot of new things coming up. Where do you think the opportunity will best present itself for VCs?
Yeah, so we tend not to be thesis driven. So we are more opportunistic, and in many ways you have to be if you take a geographic approach. But we're investing across all of those categories that you just mentioned. We haven't made a bet in blockchain just yet, but one of my recent investments is a AI and augmented reality sort of platform for workforce productivity that is doing very well. We recently, we're in the process of closing our first CPG investment, which we'll be excited to share shortly. And CPG in particular for Austin, I think, is a new market. Historically, it hasn't been thought of as a VC fundable category, but I think more and more in particular markets and particular circumstances, Austin today being one of them, it's a very attractive category. And we're seeing a lot of companies that are growing and scaling and getting to healthy exits. I think there's a lot more to come. And I think the general trend there is just the disruption of the grocery store. That and the new distribution model that is direct to consumer. So with the grocery store and direct to consumer, what we're seeing is just a flipping of, legacy brands that millennials care nothing for. And the way you target to millennials, the way you package things up, the ingredients you use, the words you speak, I think these things are changing, and it's hard for the P&Gs of the world to keep up. I think there's an opportunity now for a lot of these new brands to pop up, and we're actively looking at this space in Austin and in other similar markets to find those companies that could be venture backable.
So what's the next step for you guys at Silverton? I see you're getting into all these new segments, but what other things are happening there?
I think for the large part, we're not so dissimilar from our strategy in the past. We're primarily investing in software. Everything else is going to be more on a somewhat exception basis. Even with consumer, we tend to look at consumer internet businesses. CPG is a new category, and we will definitely be exploring this. But I think for the most part, the landscape, the ecosystem for SaaS businesses is still healthy. I think there's still a lot of opportunity when it comes to consumer-focused businesses, fintech, and as an example, in AR and VR, and in new applications, new media, and we're exploring all of these sectors.
Well, I appreciate you sharing your information with us today. What's the best way for people to get back in touch with you?
Yeah, well, you can add me on LinkedIn, or actually, don't add me on LinkedIn. You can go to my LinkedIn and find my email address, which I have publicly available. And you can also find me on Twitter at Roger B. Chen. I blog on Medium under the same handle. And yeah, I'm looking forward to connecting with some of your listeners.
Well, we'll put that in the show notes to let people know how best to contact you. I want to thank you for taking time to share your information with us today, and looking forward to having you back in the future to give us an update about how things are going with your venture capital journey and with how Silverton is doing as well.
Yeah, that sounds good. Thanks for having me.